Welcome, everyone. It's Fausto from Cyber Trade University. And how are you doing? We have a new guest here, first time on the show. Bubba's one of the well-known floor traders, been around for so long in the industry. Actually, he's talking about old. I thought I was old. Oh, my God. I'm only 53, but I thought I started as a spring chicken. He's been doing it since the 80s. I thought the 90s, and he's still around. Look at you. Still look good for your age. I mean, like, you must have been a spring chicken when you started. What were you, like 10?
Well, 2021 anyways. I've been doing this for 46 years and there's nothing better. I love it. And it's 1980 was the official start. I actually started looking at the markets before they had put options. How's that?
Oh, my God.
How's that for old?
But so you basically go all the way back. You probably remember the crash. They didn't fire you when they heard they just fired everyone with the crash. I mean, how did that work out, being back that far back?
Well, yeah, it was the crash was actually great, and I've only always traded my own money. I've never traded anybody else's money. So I
Okay.
was trading my own money during the crash, and it was the weirdest, eeriest thing that you could ever imagine from a trading perspective. I mean, from a busy pit, and if any of you remembers the orange juice scene in Trading Places was crazy. The pit went dead silence. 2,000 traders in the OAX pit, and everybody was dumbfounded by what was going on. But it was actually a great trading opportunity. And of course, the markets, everybody wants to talk about the crash, but the markets were signaling long before the crash that they were going lower. And the crash was only the headline news.
Was that your first experience? I mean, like listen, being so long, we can talk about all the experiences and what we went through over the years with COVID, the financial crisis, Hurricane Sandy. But was that your first experience, as learning as a trader, being a catastrophe like that?
I guess as a major catastrophe, yes. But I mean, I can go back to interesting story. I was supposed to go to the Super Bowl in 1985, the 1984 Super Bowl, which is 1985, and it was a Friday.
You're from Chicago, right?
Remember when I started trading, the Dow it was like 800. It wasn't at 42,000. And when I was on the floor on a Friday morning, and I'm looking at something. I go, the market's up 40, which is unbelievable for an $800 index. And I go, something's going on here. I go down to the phone because we didn't have cell phones then. We had to go down to the phone bank. I call my friends. I said, you guys go to the game without me. I got to stay and work because I can see something's happening. Call my friends, said, everybody gets short this market. And I walk back into the pit, and a guy goes, double puts, which in those times was a 155 OEX puts. He says, market. I go, a half the orders, which is 1.5, 1 3/4 at the time. He said, sold. So I know he's got a mitt full, right? So I said, okay, I'll buy 50. 2 minutes later, he comes back. He says, double puts. I go, quarter, half. He goes, sold. I go, I'll take 50. And then he looks at me and says, I'll sell you 500 at 7/8. I said, done. Buy them. Before I could write them all down on the trading cards, which are like these that I used, okay, I was selling them at $2 and $3 all the way across. By the time I sold the last one, it was $6. The market turned over and collapsed. So it was worth staying home.
Oh my God. That was the year of the Chicago Bears, right?
That was the year before the Bears. This was the one that was in Pasadena. The Bears won in '86, which was the '85 season.
The 85 season. My God, that is it. So it's funny. We all have these war stories, right? Like we always remember that big time of, the big winners, right? But, I don't really kind of like worry about the winners as much. I think everyone likes to talk about. I think everyone understands what is our biggest issue. It's about the losers. That's our biggest thing. And, you've been around for a long time. And the thing is, like, my parents always taught me, they said, listen, how successful a person could be when they hit rock bottom. We're all going to hit rock bottom. It's all about coming back. And, and I think everyone here listens, been there and done that. So tell us a little about you. I mean, like, first of all, what got you into the education business? What I mean, like, doing this for so long. I mean, why do you even do it? I mean, like, why do you teach people?
Well, I'll tell you what happened. When I have two children that are now 29 and 30. But when my son was 9, they begged me to coach, and I said, no, I don't want to coach. And they begged me, and it turned out I was really good at it, and I liked it. And I coached for about 5 years, and I actually coached teams that weren't even my own kids after a while. But I really liked coaching. And then after the floor dried up, there was nothing else to do. So what was I doing? I was sitting at home, trading off my screens. I'm looking at 8 screens right now while I'm talking to you. And I'd be trading at home. And I go, there's not much to do. And somebody came to me and approached and said, would you like to teach? I said, I'll try it. I mean, I have nothing else to do. It's not like I'm going to go to the golf course, because now I have to be a little bit more paying attention to what's going on because I don't have the floor to go back to. So I started teaching, and I became pretty good at that. And most of my people stick. And I've had customers and students going on now 14 years, because that's how long I've been teaching for. And again, I think it's great. It's nice to be able to help people understand. Everyone wants to know, well, if I make so much money, why do I want to teach? Because I can, and because it doesn't bother me, and because I've been so fortunate, have a nice life, have a home in Chicago, have a home in Las Vegas, in which I'm now, and I can teach people how to stay away from the trials and the troubles that come into traders, from either the scams that are out there or from getting away from their emotional side that mostly destroys most people.
Yeah, that bothers me too. I mean, there's so many bad actors. I mean, we were talking about this before, and like you've been around the block, and you see these things on social media. And like, first thing I tell everybody, you start seeing people start showing cars and stuff. First of all, that's illegal. You can't do that. The FTC is going to crash people. They go after people like that, okay? Because that's just showing you, like, just because they have it doesn't mean you don't know if they rented it, whatever it is. Who knows? Or maybe they did. I don't know. But like that's what bothers me too, because there are good people out there, people like you and me and other people that are on the show and stuff like that. But I think that also everyone has to understand why we like doing it so much is because it's funny. Like I would do a search on ChatGTP. I tell everybody, look up the success rate in trading. It's 10%. 90% of people lose money in trading. It's like, why would you want to be in this industry? But then when you start adding, like, well, then how are you guys successful? If you ask, well, how successful I'd be if I got traded, educated, then it jumps up to like 30, 40%. You know what I mean? And then if you find out for someone that is, that is a very reputable company like you could see it goes up, even double that. So I think that's another reason. I enjoy teaching, and I know you'd like to do it. And I want everyone out here to know that that's why we do it and why we teach. Now, getting back to the challenges, being a good teacher, and enjoy doing it. What have you noticed that why do people fail? Like, what is the reason why people still can't get it? What are you finding that advice you can give everyone here and tell them, like, what you have to change?
Well, first thing is trading is hard. Nobody's sitting on the street corner handing out $100 bills because you're a trader. Okay. There's a lot of failure. I saw 2,000 to 3,000 traders come and go when I was on the trading floor. And again, this is hard work. There's nothing for free here. You have to be willing to educate yourself, get education from guys like Fausto, from guys like me, and teach you the actual business of what to look for. You can't get married or watch the news. By the time the news comes out and you see it, you're the 1 millionth person to hear that news. Okay. You have to focus on what's between your two ears, because psychology is more important than anything else. And remember, you're in a risk business. And if you cannot handle the risk, then you shouldn't be in the business. Okay? Right. It's a very simple process. We have to be mentally in tune to the trading world and understand the risk we're taking. And we also have to be able to get out. If we're making a trade that goes awry, you have to have an exit point that before you put the trade in. You have to know how you're getting out. You cannot focus on, well, maybe it's going to come back. And the biggest flaw I've ever found in most people, first of all, they try to combine investing and trading together, which is not a combination that works. But they sit down, they buy two stocks, let's say, and one goes straight up and one goes straight down. So what do? They sell the one that goes straight up and take the profit, which was meant to be an investment, but they now turned it into a trade. And the one that was meant to be an investment, meant to be a trade, because as a loser, they turn it into investment. And it keeps going down and it keeps going down. They wonder, well, how did I lose money? Because you got rid of the one that was running in your favor that you were meant to hold, and you didn't stop yourself out on the one that was going the wrong way. And that's why people fail, because they forget the focus. Your job here, if you're trading, is not to be a predictor or a prophet of the market, but it is to make profit in the market. But it's also to control the risk. I've had plenty of bad days. Okay, listen, I got numbers that people, if they had here, they'd lose it, and if they didn't have here, they'd grow it. If I told them some of the numbers that went by.
I feel like I'm looking in the mirror, but what you're saying, I say to students all the time. And I think the reason why we have so much in common is because we're both floor traders too. I mean, I was a market maker, and like you got hired, and even though you're trading your money, but in the beginning, I mean, like they took on the wing. They always look at it. They expected you. They hired you to expect you to make money, not to lose. And losing, I tell everyone, is a good thing. You just got to know not to do it again.
Listen, I came down to the floor. I had a job going into there, and they told me I was too young to be promoted. I told them, well, go scratch. I quit. and I went down to the trading floor. Okay. I started with my own money. I learned in the battle of the pits. Okay. That's how I learned how to trade. I had nobody back me. I had nobody come to me. I had to find a clearing firm. I traded. And for my first 6 months of trading, I made my living playing gin and backgammon. Okay. And I got news for everybody out there. If you're a game player, gin, backgammon, bridge, or poker, those are 4 probability games. The better player is going to win over time. Same as trading. If you're a good trader, you're not going to win every time. But again, you're playing a probability model. That's the whole business, is based on probability. And it's a math game, not that I got inside information, that I know something. Because again, news is worthless. The information you get is worthless. The chart and the markets will tell you everything you need to know if you can learn to read the footprint.
I also have like an article I send people out as, like I was, someone taught me to learn how to trade poker. If you're a good poker player, you'll actually be a good trader. Same thing. You're good. See, that's exactly, you gin and everything. You got to be a good poker player because you just got to know how to be patient, relax, lose, no big deal, come back. You just got to make sure you're not the person like, I'm all in. And that's how you blow up your account, But that's been a big, been a big challenge. Now, regarding about what's happening right now, listen, I don't know what the hell's going on with you, Bubba. I feel like the world's on fire. You got wars going on. You got the hurricane that's going on. You got this huge strike that's going on right now. I did a bunch of videos on it, and people have just been asking me back and like, well, what should I trade? What's in there? I'm like, listen, this is what you have to learn on your own. I mean, I can't teach you how to play poker, like you said. You got to be able to know how to deal with. But what are you focusing on? What's going on right now? I mean, like, what's the leverage? I know you trade a little bit of everything, but what do you see what's going on with the market, and what do you think is going to happen?
I'll trade any liquid market because that's what I do. And again, to me, they're all the same. I mean, if you look at a chart, all charts are the same, all patterns repeat themselves over and over again. So it really doesn't matter. I'm watching on TV when I have it on. If I wasn't with you right now, I'd be watching VSiN, Vegas Sports Information Network. Okay. The news is worthless. You can see the news in the tape. If you watch the markets, you can see news because the speed of the market picks up, the action picks up, and suddenly you know that there was some sort of announcement somewhere. Everybody talks about, the economy sucks, which it does. I don't care what anybody says. I say we're in a recession. If you're in the middle class, you're in a recession. That's my opinion. But that doesn't mean that the market's going to go down because of that. Remember, we are in an election year, and election years are typically higher 65% of the time. And I mean, if you ask me, I think the banks are in trouble, which is why the Fed just cut rates. And if anybody hasn't noticed, they cut rates 2 weeks ago today. The interest rate market itself has gone up every day for 2 weeks except for yesterday. So mortgage rates are higher, interest rates are higher. So the banks are making a bigger spread because the Fed funds rate that the people borrow on, we don't borrow on that. Banks borrow from the Federal Reserve and then send the money out to their customers, and they're working on the spread between what they borrow at the Federal Reserve and what they lend it out to you at. And they're not cutting their rates to give you the spread. They're just making more money. And this whole rate cut was more designed to bring in more inflation, which will not be good for equities over the long haul. But again, can I tell you when we're going to go down? No. I thought yesterday was a perfect scenario that the markets could break yesterday for a short term. But overall, we're still in a general uptrend. And I certainly can't tell you that the world's coming to an end tomorrow.
Yeah, I mean, listen, regarding about the Fed, right? I totally agree. I mean, the credit cards are out of this world. Did they lower the credit card rate? No, the only thing you're getting lowered is your line of credit. I mean, that probably went down. So basically, it's it, right? Who's making more money? More the banks, and the banks still going to keep their rates the same. So they're doing pretty good. It only helped out them. But regarding about the strategy, what's going on, not just on the Fed rate, but what's going on with the economy? Because, like, listen, I always tell everyone some of the biggest catastrophes make the biggest opportunities us as traders. I mean, that's really what we need. Like I just did I did a video on that everyone could watch on my YouTube and Instagram, so on, about what just happened with the strike that's going on. So I don't know about you, but I don't think people realize how serious this is. If this thing goes on, this could be worse than COVID. I mean, talking about the supply chain. I mean, you could see a lot of things, and people are going to benefit from that. And then the war. I mean, look what happened. What happened yesterday? You had Iran attacked Israel, and sure enough, Lockheed Martin just went up by 25 points. You know what I mean? Like, and people like, if you're anti-war or market or what's going on, as traders, we're the same party. You know what I mean? If you don't think, then short the damn thing. Let me know how that works out for you. you know. But what do you see that you would position yourself right now with all these things that are happening?
Well, I would like to position myself, to the short side of the market if I was looking to position. But again, I'm not ready to do that yet. I don't think that we're quite ready to break. Again, there's too much money in the money supply, which is really floating this market. The higher inflation makes it harder. I think a great opportunity is coming now in the commodity market, like in the grain markets. They finally looked like they found a bottom. And I think that those are an outstanding opportunity. If you trade that world, the grains and things like that, they're continuing now to start to run up. And considering that the short position being held by the funds is the largest since 2019, if they continue to rally, we could see a massive short squeeze in the grain markets. And since the farming community is actually working at a loss right now because of the cost of production, we could see a big inflation rally. And that's what you could see in commodities. And I think commodities right now are an outstanding place to look if you're looking for a way to play this market and looking for the things, because we're going to see shortages coming, which is going to raise the prices. If you haven't been watching crude oil, it just went from $67 to $72 in 3 days. So these are things, because it's called the inflation trade, because the markets are going to inflate, not the markets, but the products are going to inflate, because there's going to start to be some shortages, especially with these strikes that are going on at the ports.
And when you think that it's going to really start affecting with well, depending how long the strike goes on for, how long do you think it's going to take before it starts affecting the market?
I think it starts affecting almost immediately, because I think what you'll see, this is one of the problems that we have in this country, is that the prices will start to rise even though there may not be a problem yet. I think the real shortages that we'll be concerned about will be a couple of days, because again, we're big consumables of goods, and of course, you're going to start to see some empty shelves. This is always a problem. People want to buy 800 rolls of toilet paper, which they couldn't use in a lifetime, but they got to have it, right? I mean, you'll start to see.
I'm going to go when we're done here. I'm going to buy some more toilet paper, because I don't want to be short. Because I already work with sandpaper and it didn't work. It feels too good.
I think people got to watch. If you forget about looking at the market right now, if you're watching and you're going into your grocery store, you'll start to see shelves start to empty out. That will tell you that the strike is in full effect and there's big problems. I mean, a lot of people don't realize things you do every single day besides trading. You see things that are warning signs that are telling you empty shelves at the grocery store. Suddenly gas prices rising. Those are not good things for stock markets as a rule. Yes, there's always different sectors that are good. Defense is probably still good, but again, a lot of that's been run up. But again, you got to learn to read the tape or read the chart, because that will give you the best clue and the best idea of what to do. And then you got to determine what type of time frame are you looking for, what you're expecting, and what type of risk are you willing to take. Because again, as I said earlier, there ain't no free lunch, and nobody's handing out $100 bills.
That's right. That's right. Amen. And, regarding about, a little bit about how you and I trade too, also very similar, is that people don't realize that everyone's always like anti-day trading. You know what I mean? Like, oh, you lose all your money. Listen, you don't have to day trade to day trade. But like you just mentioned, like you're watching real time. What's going to affect what you're talking about, like it happens over the course of the day, and you'll see it. And if you're not prepared, I know some people are investors or swing traders, meaning swing is obviously holding it more than one day. For some people, want to know the difference. It's going to affect it. And the next thing you know, you'll be like, oh, I'll sell tomorrow. Let me go check back a couple of. Next thing you know, you're down 30, 40, 50%. And I'm like, well, didn't you see what happened yesterday? Well, I'm not a day trader. I'm like, we're all day traders. Okay. It's what happens if you're not paying attention. You're going to put your pants down, and you're gonna get crushed, because some of these things, that's what ends up happening. You can get caught.
That's where your method pays off, because you're looking for those types of places to make entries.
Exactly.
I watch your stuff all the time, and,
Right.
and it's unbelievably good. And again, it's part of the business. You can't, if you're looking to do something, there's always something to do if you can find it. But the other big thing, and you and I both recognize this, sometimes there is nothing to do, and you have to just sit. You have to sit quietly, sit on your hands, because sometimes there's nothing to trade. And you got to be very careful about how you handle it.
Yeah, just sit on your hands. You don't have to trade. Just sit back. It's not a full-time job. That's why everybody thinks you got to be here all day. No, listen. I was out yesterday. I was in Chicago yesterday. I went to go see a doctor. You know what I mean? I came back. So and I come back today, and I was a little disappointed because I wish I could have day trade Lockheed Martin, but I own it as a swing trade. You know what I mean? There's things that because who know that they were going to be. There's this what's going to happen. And if you were short, you would have crushed. You know what I mean? If you weren't prepared for that. But looking ahead, what are you basically seeing looking ahead as the market goes? I mean, as in with everything, with the election coming up and stuff like that. I mean, I still don't know the policies that I know what President Trump is looking about, but the policies on what you know, what's on the other side. But like, what are you seeing? What do you think people should focus on as market goes?
Well, I think you focus on the market is that you can bet that inflation is going higher once again. Okay,
Inflation is going to go up. Yeah,
the rate cut, inflation is going higher. That's the reason for the rate cut, because that is known as the hidden tax of inflation. Okay, and when every goods and services you buy has a federal tax associated to it, and the fact that they're spending way too much money. So again, that's one of the things you'd be looking at. So when inflation starts to rise, we already have the president and CEO of Darden Restaurants said, and that's Olive Garden and a bunch of other restaurants, but Olive Garden has already said they no longer get the customer that earns $70,000 and below because they can't afford to come there anymore. Their customer is now 100,000 plus that typically comes there. So that's already telling you that the economy is in trouble. Again, can we predict it to a certainty of when it's going to happen? No, that's why you learn the stuff that Fausto teaches and what I teach, because you can start to see it develop within yourself. But overall, I think the economy is in very, very bad shape. I think that the government in place right now is trying to get nationalism or globalism. I don't think that's very good. I think they've done a good job at trying to destroy the free market, which is not good. Again, you and I both know that asset classes will price themselves through price discovery. And when you start trying to take out the price discovery model, you're bringing trouble. And I wasn't happy when I heard even President Trump saying that he wanted to limit credit card interest rates to 10%. That's not the free market. The free market will tell you what the price should be. And just like buying a house or anything else you buy, it's bought on a price discovery model. What are you willing to pay? What is the seller willing to sell it at? And if they would just leave the markets alone and leave the interest rate market alone and let us trade these markets, we will establish the prices. That's what the market is there for, to establish where the market is going to go and what the next price is going to be.
Yeah, the more that's out there, the more there's competition, and then the market will figure itself out. I totally agree. It's like, I know I have a bunch of people from Canada. I mean, like now in the Canadian market, there's 5 banks you got to deal with. You know what I mean? Like here in the US, we have so many banks, so you could shop around different credit cards. They're competitive. And that basically is just kind of the same thing. So so now regarding about is there you had this hurricane that hit in down. I mean, my God, it is devastating. My prayers to everyone down there. My thing I'm worried about is like now you have the supply chain that could probably kick in with this strike going on. I mean, listen, it's the East Coast. Everything is right there. Lumber. We also what happened. I remember during COVID, a sheet of plywood, 3/4 sheet, was $25, and it went up to about $80. You know what I mean? So food, everything. Is there any markets that people should be focused on, maybe going short or long? You thinking? Obviously you lived through this once before. We all have.
I've actually I lived through 2008 too on the floor, and 2001.
Yeah.
I think you have to watch. Just because we say like look to buy some of the food companies potentially because prices are going to go high, and that their profits are going to be bigger. One thing we've learned with all these crises is that corporate profits typically go higher because they're well ahead of the curve at raising their prices, right?
Right.
Well, they know what's coming. I think oil companies, you're going to see, listen, there's a problem with oil. And again, because we are not self-dependent on oil, even though we produce more oil now than ever, we ship all of our oil to China and everybody else. We're still buying from Saudi Arabia and OPEC, which again, in my mind, makes no sense. But again, I think oil companies are pretty depressed. Again, I don't make any recommendations, but I'm looking at Occidental Petroleum right down here. It's at lows it hasn't seen for a while. And I do think that if this strike continues, oil is going to start to go through the roof. Again, there's going to be a lot of shortages. And what you want to look for is what companies are most affected by that. And then identify when you look at their chart to see if they're ready to pop and explode to the upside. And that's or to the downside. Again, we trade either side of the market. We don't care. We'll short or we'll buy because, again, at the end of the day, life comes down to 2 things. One is always money. And that's what we're here for, to make money.
Well, which leads me to that question. So how do you know that? Like, listen, everyone has a style of trading. I mean, you and I have very similar because we're a floor trader. So what do you look for? I mean, as a trader, is a certain indicator, is a certain chart, is like I work on order flow. I'm looking at the high frequency trades, so on. So what's going to give you that spike?
I got you. Listen, I read the charts independently as they are. What I look for first is if a company or stock or future, again, whatever I'm trading, either gets extended, overbought or oversold. And again, I can kind of see it because remember, as a floor trader, we didn't have charts. We didn't have indicators. We had to be able to make a decision. And in my day, had to convert fractions to put a spread together, right? But if you're looking, okay, you want to find it overbought, oversold, and certainly you can look at using the Bollinger Bands. They're as good as any, 2 standard deviations away from the mean, because more often than not, you're going to see some retracement. So if you're looking for a trade, I would start there. And of course, if you looked at Apple on Monday, it was very overbought. And what happened Tuesday? Got clobbered. Now again, it doesn't always work that easy. And I don't really think that it is easy, but that's where you start. And typically, you might start on a daily chart and then walk your way down. I mean, I use on my active day trading, I use 4 minutes as my long-term time frame and 1 minute as a short time frame, because I use 4 minutes to identify the trade I want to make, and then the 1 minute triggers my entry. Okay, and that's what I'm trading on a short term. If I'm going longer term, then I'm using the options world, because if you learn how to use options correctly, you can create positions that give enormous amounts of potential upside, but you can limit your risk instead of just buying a straight out call or a straight out put. You can actually create a position that gets you in cheaper, takes care of some of the time decay, and allows you to hold because you know exactly your exposure when you put the trade on.
Well, maybe could you be so nice and show the audience, everyone, to hear a little bit about how you actually do that?
Yeah, sure. Hold on. I got to go to my share here, and I got to share my entire screen, and I got to share this thing here. So you see my market maverick, but I'm going to bring up some charts right now. We got so many things going on here. Okay, so here's what I'm doing this is what I do every day, all day if I'm trading. Okay, these are 4 minute charts of 8 different markets. Okay, and what I'm looking for in this particular model, I'm looking for an overgrown extension. Now this is already late, but this morning when we were trading live, we were actually buyers down here. Okay, this was what I would call a blow up. You had heavy volume, you had straight down price movement, so we were a buyer, and the markets did go the correct way. Now, they don't always go that way, but they did go the correct way. Gold, we were sellers earlier. And again, it's when they get extended on heavy volume, what you really need to see is a market that has way more unusual volume, which again, right now, that doesn't look like it, but before this came out, you can see how light the volume was, and you need a dramatic move in price. So what you're really doing, Fausto, is you're really picking on those who get emotional, okay? Because those patterns are created either by what we used to call on the floor the tap on the shoulder. Somebody's being forced out. There's an emotional side there. And there was an old saying on the trading floor: if you can see their tonsils, give them anything they want, they're wrong. Okay, and that was always the motto and the creed we live by. So here I'm looking here. So if I see something unusual here, which right now we don't have anything, so I can't show anything. But once I see it here, then I flip to the 1 minute here, and the 1 minute is the trigger. So if I'm looking to buy, I'm looking for a 1 minute green candle, so to speak, so that I'm going to be a buyer. And then I'm setting my stop immediately. At the same time that I'm buying, I'm putting my stop in, and then I'm putting in a few target exits. And I never take off my full position at my targets. I always try to leave something left over to run, because that's what I think always has the potential. But I won't let those turn back into losers. I will start to adjust my stop, and then I will start to read the chart. Now, on the other side, when I'm looking at the longer and stuff, and you can see here, these are the Bollinger Bands. And I happen to have soybeans up because I just came off of Farm TV. Okay. I said on Monday that soybeans were overbought, and I would expect to see a little bit of a pullback. And of course, we've gotten a little bit of a pullback. And again, it's not always going to be right, but this is a general guide. You get a market that gets extended too far away from the mean, there's a greater probability that it's going to have some mean reversion. And these are, you make some little trades of what you're going to do. Again, all you're trying to do is make money on your trades. Okay. Every trade's not going to be a winner, but you're trying to make money on all the trades you make, because what you're really trying to do is you're trying to make a bigger pile of money so that you can trade a bigger size and make another bigger pile of money. Nobody should ever come in guns a-blazing with their entire stake to go into any one trade. You have to trade everything in a percentage wise. But I mean, anything you look at, I mean, I go through this every Monday night with my members. I told you, Apple was overbought right there. See, and look what happened. Right down it came, right back to the mean. Okay.
Wow.
You can see Amazon was overbought, came right back down to the mean. Again, these are mathematical numbers. And again, remember, if you understand the math part side of this, the mean can be higher than your entry if you just wait. It's not an automatic. It's what it is. It's an idea that you know that there should be some sort of a pullback, but you also must protect yourself with an exit point and not one that you're mentally working on. You have to put in a hard exit when you're starting to trade like this, because at the end of the day, you will. I know people, and they always make exceptions. You know, they say, "Well, I'll give it another couple of cents. I'll give it another couple of cents." And before you know it, it's $1. You've lost an additional $1. You can't do it. But again, you look at any chart at random, and you can see that Google was a little bit overbought. And again, I'm just picking these at random because I go through these all the time. But I want you to understand that you need to learn how to read the overall action, right? The tape action, the chart action, because the chart is a great tool that is telling you information. And what it's telling you is, where is the order flow going? Where is the money going? Is the money being buyers or is the money being sellers? They're making price discovery. And I think if you break the market down into 3 basic phases, which is consolidation, breakout to a trend up or down, and then usually most markets end in what is known as a blow-off pattern, where price and time become irregardless, and people are either getting out or getting in covering, because that's usually what happens. And that's basically the stuff that I used to trade all the time. And that's what I'm always looking at.
Could you look at one stock, which I'm curious what your thoughts are on it? It's one stock that we're trading right now, and see what you think. I'm going to type it in here. WHLR.
Okay. Well, this has been obviously very narrowly traded for quite a while. It probably plays it had a reverse split, I guess, or a split.
Yeah, plenty of times.
If I were going to do anything here, I would be looking to be a buyer. I don't know if you guys are short or long. I don't care. If I were looking at anything here, it is, first of all, it's very narrow, so it's hard to trade. I typically try to stay away. But here, okay, I think that if I were going to do anything, I'd like to be a buyer. And you can see here, now here's exactly what I'm looking for. These 2 gigantic up bars,
yeah,
back to back, I would have been a seller off of that. Okay. Now, again, I didn't make the trade, so I don't want anybody to think that I'm going back. I mean, you asked me to look at a stock, but if I were looking at that, I'd have looked to be short here. And now, and you were also at the same time here, you were also overbought there, right? Blow off to the upside, crazy volume, went straight up, and then it came back straight down. You might be seeing that same happening here by the end of the day. You could see this reach up to here, and you could see it come down. It's obviously a very wildly traded stock. But right now, if I were going to do anything with this before I can see the end of the day, I'd look to be a buyer.
Okay. Yeah, because it stocks up like 130%. It's up almost $10 so far. It's on a big run. The volume was extremely light, but it's just, as a day trader, it's just one of the stocks that we've been.
What do you guys? You guys short or long?
What's that?
What are you guys, short or long?
Oh, we were long from this morning. So,
okay. So I gave you a good read then. I agreed with you, and I didn't even know it.
See that? See, we have something in common. You see that? That's why I was asking you what your thoughts are, on it. But that's exactly what we're looking at.
Just let me interject here one thing. I think people who trade, you never chase a market in either direction. Don't chase them down. Don't chase them up. Right. I assure you, 90% of the time, you'll get a better opportunity to do what you want. And chasing only forces you to usually lose money, because then you get stopped out sooner than you would have. And my record, for full disclosure, my fastest stop ever was 7 seconds.
Well, listen, let a stock come to you. You see, people don't realize that when I trade on direct access, people don't realize that you actually have a seat on the exchange. They changed the laws, so you don't have to be like a floor trader like you anymore. Now we all have direct access. So let a stock come to you. Don't chase it. And like you said, it ends up costing you more money down the road, and that's how you get yourself in trouble with it. Now regarding I know you trade all different types of markets. Is there one specific brokerage firm you prefer over the, to use certain things, like you would tell everyone? I mean, listen, we don't make any recommendations of brokerage firms here, whatever it is, but depending on, because there's people from all over the world, they don't have access to certain brokerage firms. But is there a specific platform that they could use that you would use, that you prefer, or certain tool?
I like TradingView as a charting platform, which is the one we're looking at now. It makes it much easier. Like, I do cover 8 markets. Like, when I'm trading live with my members in the morning, I'm trading these 8 markets all at one time, so I can see them all at one time. Again, brokers, again, I think it has to be who you're comfortable with. I mean, I use Tradier, and the reason that I use Tradier brokerage, and you have to be a U.S. citizen for Tradier, but it's $10 a month flat for commission. So again, that saves me about $100,000 a year in commissions, right? $10, I pay $120 a year for commission. Okay. I've got futures brokers, and I will make one recommendation to everybody. If you trade futures and you trade equities or options, equity brokers are great for equities, and that's their specialty. Commodities and futures brokers are great at what they do. I have yet to find one broker who can do both of them well. And
I say it all the time.
If you needed to get to a broker because you have a problem, you're not calling to say how you doing, and a lot of them you can't get through because they got too much stuff going on. And so I think it's just very careful. You want to trade equities, use an equity broker that specializes in equities. You want to trade futures, use a futures broker that specializes in futures. That would be my recommendation.
I say it all the time, and I'm glad you brought that up, because I say that probably every time I do one of these events. Every broker, like, they won't want to be jacks of all jack of all trades, but they're really not. You know what I mean? Like, Thinkorswim, I'll give you an example. They a great options platform. If you try to stock trade, you know what? There's better. You could, but there are better ones out there. Schwab bought them out. They have the Edge platform. You know what I mean? Like, and you don't want to mix and match. Another thing I try to tell everybody too, like I was doing a class today, don't have your swing trades mixed with your day trades, because then you look at it, you end up, it becomes a distraction. You start looking at it and you're like, oh, and then all of a sudden, like, you're in a stock, like, oh, maybe I don't want to take a loss. And it becomes, just keep everything separate.
And that's why you're the number one teacher.
There you go. Now, all right, so that's great. Now, listen, regarding about, I know you train thousands, tens of thousands of people. I mean, like, if anybody wanted to learn a little bit more about you, of how you trade or teach, where could they go really quick?
They can go to BubbaTrading.com and check it out, or they can email me direct at Bubba@BubbaTrading.com. I'll answer your questions whether you're a member or not. I'm a believer in helping people. I've been very fortunate, and I'm happy to help anybody. So if you have a question, you can email me, or I do also have a book that you can read. I've written 2 books on options that I'd be happy to, that your people can have as my gift. All you have to do is email me at Bubba@BubbaTrading.com, and I will send them a PDF file immediately. And one is Bubba's Guide to Trading Options, which is almost like a textbook, because there's a quiz at the end of every chapter. And then there's Bubba Guides to Trading Weekly Options.
Hey, listen, if they're fast reads, and you know what, there's some great books out there. And there's the link. We just post a link up there for everybody to watch. We put link up here. So anybody wants to get it, that's all you have to do is go there and get it. Now, listen, on the opposite side, about trading. Okay. What do you do in your off time? I mean, like, listen, we know we don't trade full time. You know what I mean? So what's the other side of that Bubba does after he's done trading?
I played golf yesterday.
You did what?
I'm playing poker today.
Oh, yeah.
I'm playing poker tomorrow, and I'm playing poker on Friday.
Is that why you have a place in Vegas? Is that why you have a place in Vegas?
I mean, listen, I play. The only day that I don't do anything is Monday, because I'm real busy on Monday. I have my Monday night call, and I got a lot, and I do a lot of TV stuff. But I trade. I get up at 1:30 every day, 7 days a week. I work out first. Okay. Then I come to work, and either I'm doing writing or I'm looking at markets and trading. But yesterday I played golf, and then I'll play poker the rest of the week after, starting at about 11 o'clock my time. And then next week I'll be playing golf a lot. My son's coming in, so we'll play golf every day, play Shadow Creek. So I'm good with that. And again, I go to the pool, I go to the casino, whatever. I won't be sitting here. If there's nothing for me to do but get into trouble, right, I'll walk away, because it's easy to see a mirage in a chart when you're desperate to make a trade. And I think that the biggest thing people have to learn if they want to be good and strong in this business is the psychology part. I would say, I don't know where you stand on this, Fausto, but I believe that psychology is somewhere between 80 and 85% of the business, because we can all learn to read the chart, but do we have all the discipline to wait for the setup we're actually waiting for? So I think a lot comes down to the trading psychology and the mental side of trading, because too many people blow themselves out trying to chase after markets that they have no business to be in the first place.
Yeah, and that's a big part of trading. And one of the ways I kind of teach people how to do that a little bit, you're just like, you're talking about, gambling, stuff like that. I say, listen, if you ever play blackjack, I tell them, I says, well, let's go play dollar hands with one single deck. People are like, why am I wasting my time? Why would I do that? I mean, like, you're not going to make any money. I'm like, exactly. And you're not going to lose any money doing it. The whole idea is, you need to learn how to just play the game. You know what I mean? And eventually you'll know when to hit, you'll know when to stay. And then if you hit big, it's like, okay, no big deal, and if you lose, you're like, no big deal. And exactly how you win in trading is how you would react. Because when you do win big, it's like, okay, I did well. I'm not going to go run and go brag to my wife, hey, I made all this. It's it's your job. You know what I mean? You can't sit there and like, you're not going to go there and cry with her. And she could be like, because if you are, she's going to tell you to quit your job. It's you have to treat it. And a lot of it is psychology.
It's interesting because I had that conversation with one of my members this morning, and I said, he said he was sim trading. I said, look, the micros are small enough that there's no money really involved on one micro. You have to feel the thrill of victory and the agony of defeat. Okay. You cannot learn that feeling when you're not trading for real money. Okay. Again, that's my thoughts. I don't believe in it because again, you have to feel the good when you make money. You got to feel the pain when you lose money, but it doesn't have to be a lot of dollars. Okay. Mm-hmm. Again, it could be $10, win 10, lose 10, but at least you're feeling the win and the loss and you're starting to understand how the business functions. Okay. Listen, there's no pride when you lose 50 grand. Okay. But again, you want to be able to get to that position and be able to lose that kind of money, but right. You can't get there tomorrow. You have to build slowly, organically grow your account by continually to trade and figure out how to read that tape, how to read that chart and find or order flow, which what you're doing. Find those opportunities because those will give you the highest probability of a chance to make money. Do they all make money? I guess you make money in every trade, right, Fausto? Right? I mean, listen, I lose plenty of trades. Okay. Again, it's not the question. The question is at the end of the day, end of the week, end of the month, how am I doing? And everybody should set some small goals that are attainable. Okay. And again, if you don't see something happening in the markets or worth trading, then don't trade. Walk away. Learn to go play poker. You can do what I did last week. I walked into the poker room. First thing I get pocket aces, pocket rockets, as I call them. I get it all in before the flop. Guys got pocket kings. Right out of the box, the king comes, and there's my 500 down the drain. Goodbye. And again, it happens.
But before we go, one question about your poker story, just really quick. Just tell me, like when people ask you, like when you go there and play poker, when they say, "What do you do?" Like obviously, they ask, "What do you do for a living?" What's the expression on their face? Or I mean, like, because sometimes I talk to people, they don't get it. They're like, "Would you do what?" And you make money doing that, and you're here. Like, what are you doing? You ever have that conversation?
Oh, yeah. A lot of people don't. Listen, most don't understand. If you go back to your childhood, we're not taught this business in school. We're not taught financial literacy growing up. You're taught the same stupid crap that everybody's done forever. Okay? Right. Versus learning. I mean, I actually had, before COVID, I had a high school program teaching financial literacy that was in 600 high schools. Okay, during COVID, we got kicked out, and the teachers didn't want to teach it anyways, which is a bigger problem, which is what creates a need for you and me, because you and I, although we don't have to teach, are willing to teach and share our knowledge to help people be better at this, because it takes a lot of discipline. It takes a lot of heartbreak. Again, this is hard. We're not stealing anything. We're working hard to get where we want to get to, and then we make it sound easy because once you get into the habit and you know that you have to do certain things, then it does become easier, but there's still heartbreak and there's still losing trades and there's still drawdowns that somehow show up.
Well, Bubba, listen, thanks for coming to the show. And I think, and everybody will post up this video a little bit more. If you missed it, we'll get some shorts out, everyone, to watch it over. But listen, it was great having you on. And like I said, it's always nice to see that we all pretty much have the same, mentality and psychological part about it, because it really is it is very mental and it's going to take time to learn. You got to work your way up. Just got to be patient when it comes to trading, and you just got to expect to lose. Just got to know how to control them. But thanks so much for coming on, Bubba.
I appreciate it. Thank you so much. It was great. Thanks everybody for listening.
And I got to take some lessons from you. Teach me how to play a little poker and know what.
Come on out, baby. I'm coming to Vegas. I'll be there.
Thanks everybody for listening. And if you want to come and also make sure you subscribe to the channel, top left-hand corner, take your phone, scan the QR code, and just give us a like, a hands up, and a thumbs up. And like I said, share our content. Thanks everybody, Bubba. See you.